third-party Nexus. This is what came out of Tyler Pipe and Scripto. The activities of third parties can create Nexus if they're helping to establish or maintain a marketplace. And this is the one that catches most companies who are selling through traditional means, through traditional channels. They just sometimes are shocked that third parties, people who have no relationship to them other than this business relationship, can somehow create Nexus for them. I mean, they don't control their hours. I mean, they can work with multiple parties. I mean, they're not exclusive, yet they can still create Nexus. And while both Scripto and Tyler Pipe involved solicitation, since then, this term of establishing or maintaining a market has really become an umbrella term. And we now have a whole bunch of activities that fall under this umbrella. We've got some listed up there, but really anytime someone's facing the customer, if they're interacting with the public, then that's generally a rule of thumb that it can be Nexus creating. If you got someone in the back office and they're a third party, someone doing some accounting work for you, or even developing software for you, these types of activities are not customer facing. So they're not generally, going to be fall under that umbrella of helping to establish or maintain a market. But, installations, implementations, training, anyone performing services on your behalf, sales, customer service, collection, credit checking, most of these are when people are interacting with you or for you with your customers, and going to be Nexus creating. Here's where this gets a little bit even more confusing, because it's not just where those contractors live. And by the way, this applies to employees. Anywhere you have someone traveling on your behalf for employees, it could be for any reason in some states, like Michigan or in Arizona. If you're there for greater than 48 hours for any purpose other than really, going in and to a trade show, then that's going to be Nexus creating. For the independent contractors, they have to be helping you to establish or maintain a marketplace. So that's a little bit higher standard there, but anywhere they travel on your behalf can be Nexus creating. A little bit hard to track that sometimes. It gives lots of companies lots of heartache. All right, so inventory. This is another big one. Most states say that, if you own tangible personal property in another state, of which inventory, fits the definition of tangible personal property, that is Nexus creating. Some states say a stock of goods. Some people, states say the use of a warehouse. Doesn't say the ownership or rental of a warehouse, just the use of a warehouse. So inventory, something that many don't realize create some type of Nexus for you. And then related entities. Sometimes this is referred to as affiliate Nexus, as opposed to, we're going to talk about click-through Nexus a little bit, but related entities, remember that if independent contractors, if true third parties can create Nexus, then if you have two related entities, especially if they're performing services for one another, that can create Nexus also. All right. Here's a big one, where you have employees or locations and even home offices. Someone working out of their home, you have an employee in a state. Remember, we said, in Michigan and Arizona, having someone there for greater than 48 hours. Well, someone lives there and works out of their home, that's greater than 48 hours. So where you have employees or locations, if you are an online seller, lately I've been hearing, even from advisors of online sellers, well, they have a virtual office. They're not located anywhere. Well, they got to be located somewhere. I mean, that's, we can't defy the laws of physics. And wherever you're operating your business from or wherever you live is going to be creating Nexus for you in a situation like that. All right, so